Just a sec. Okay, and we are now live. So welcome everybody to another episode of the Crypto Hour. There's been some misunderstanding, so there are some people that are still in a different time zone. So using daylight saving causes a little bit of trouble during October. But by the end of the month, by the time the UK adjust daylight saving, then the timing will be the same for for the whole winter. So have a bit of patience and just have a look. At the moment, as far as I'm concerned, the timing of this is always 8 a.m. in the UK. If there is a change, I will let you know. Okay, let me start sharing my screen first. Right. So we're talking about last week, waiting on Friday. Probably the biggest announcements apart from interest rate announcements is the non-farm payrolls, which was last Friday. Thank you. Last Friday before market open in New York, and the result, as you can see, was much better than expected. Okay, so we expected about 150,000. The result was 250. So when there is such a big difference, there is an immediate adjustments in the markets. But what adjustment? Why? What does it mean? And this especially combined with the unemployment claims from the day before. It basically is telling the markets that there isn't such a hurry to lower interest rates because the market is doing okay as it is. Thank you very much. Okay, so if I show you a few charts of what happens during one of these announcements, how quickly things change. So where are we? So this is, as you can see, Friday. So this is just one chart, one US dollar chart. Okay, so move from 142 to 146. So this is a massive range for a day of trading. We'll have a look at the dollar index. Let me just remove drawings. Dollar index. So this is a basket of the dollar against a number of other currencies. And again, if you can see here on Friday, again, a really big move. So 101.50 to 102. So more than a 1% move on literally in minutes, because most of this move happened straight after the announcement. So if you go and compare it to the past, in the past couple of months, this you find very few days with such a big move. You want to take this and move it around and see where do you find a day that's moved as much as this, and you have to keep looking quite a lot to find. There's one here, which look, by chance is another Friday at the end of the month, so another non-farm payroll day. So why do we say to everybody, be careful doing these days? Is because this type of move tend to, apart from this one, the 7th of August, this was the, I think, interest rate announcements. But so the non-farm payrolls do provide a lot of volatility, and especially if you are in the markets trying to buy and sell stocks and shares, foreign currency, and other things. What I say that stay away during the time of the announcement, because it's literally like flipping a coin. So unless you know what the announcement is going to be, and these are kept under very tight control, it's you will be taken out of the market and dumped wherever you don't want to be, because even if the market goes in your direction, there is such a high volatility during the time of the announcement that probably before going in your direction, it will go against it and take you out with your stop losses. So stay away of these markets. Now, as I said, the biggest difference that we see is in the interest rate markets. So if we go and have a look, for example, at the long-term yield on the 20-year bonds, which is I'll show you this simply because it's a market that is so huge that even the US central banks cannot do much about this. So this is where the market really reigns supreme. They can affect the lower duration up to about 10 years, but the 20 and 30 years, they are completely dominated by the market. Now, if you see what was happening here is that, all the way from April till, mid-September, a couple of, almost like a month ago, the interest rate kept going down and down and down in anticipation of interest rate cuts. So it's all the way from 5%, it went all the way down to 4%, even if interest rates hadn't been cut at all, during that period. And what happened is that because, the economic news are indicating that maybe, we didn't need to, the central bank doesn't need to move that quickly, then now the yield on these bonds is actually climbed back to about 4.4%. So these are both big moves, down from 5 to 4 and up from, especially up at a time when interest rates have been cut, is quite telling. So that it's, who is it good news for? Who is it bad news for? It's good news for people that have, savings, so they get more from, for their savings. It's bad news for people that have loans, or mortgages or anything else, because then, their prices, at least the ones that need to renegotiate this, and we'll go into this in a second, because obviously, people that renegotiate their loan, especially when we're going, especially in the US, where loans are very long term, and we're going back to a time before 2021 when, as you can see, interest rates are 1% or below. So renegotiating from 1% to 4% is painful. So you're paying four time the price when renegotiating the same loan, basically. But so basically the things is the picture has changed, because now the market is not expecting the world to end, but is this an overreaction as well? And this is what we're going to look at right now. So let me just go back. So the main thing that we look at is that this debt service ratio. Okay, and this we have the long-term debt serving ratio from 1999. So the one thing to see, so where we are now in 2024, and this is kind of like it's up to March. Okay, this graph, it's carrying on climbing. Where we are now, we are at the highest level we've had since 2011. Obviously, previous 2011, we had much higher debt service ratio. So at the peak in 2000, before the financial crisis, was 18.5%. Now we just above 15%. But the reason for this, and for this slow growth, so this is when the interest rates have started climbing, and so then people slowly had to renegotiate their loans for a higher rate. Now, it takes time because the majority of the loans in the US, the house loans, are on 30-year mortgages, where in other countries, much lower duration, or there's a bigger part of floating loans as opposed to fixed rate loans. So it is an increasingly painful experience, and this is what we got to look at, because as people pay more money to service their loans, they have less money to spend in other things, and other things include the things that the companies in the S&P 500 and all other companies are selling. So the market is slowing down for them, basically. So the expectation that they are going to, in future, carry on providing the same sort of returns, it's not quite there. So And also, if we look at the the amount of loans to US businesses, again, this has started climbing again to the variable rate loans are started climbing again after 2021. And again, this as this climbs, it's become more and more painful for businesses to finance their operations. Now, this will put things into perspective. I'm thinking it shows you as well why the difference between the US and other countries. So the top part of this table is the private sector debt service ratio, and you can see here the US, because we're looking at that at the moment, is gone from 13.7%, slowly climbing from 2021 to now the first quarter of 2024 was 15.1%. Okay, so it doesn't seem a lot, 15% compared to especially other countries where you can see now in Australia, you guys in Australia are paying almost like 21%, almost like 25% in Canada. And in many other countries like Switzerland, and even like Korea, Norway, and Sweden have much higher rates. But then, a lot of these countries, you have to balance that out with what they get as well, for free, that instead you have to pay for in the US, especially when you look at the Nordic countries. They got very, very high level of, social security attached to their economies. Now, this is increasing, say, steadily, but if you look at the deviation from the 20-year average, at the moment, and again, this is going back to the average for the US, but it's still at the moment below the average of the past 20 years. So they're paying on average less for the home loans they have done over the past 20 years. Obviously, the situation is similar in most other countries. As you can see, from where we were in 2021 to where we are now, more countries are showing a deterioration of their numbers. The US has gone from -2 to -0.6. On the other side, Australia, again, has gone from negative in 2021, where positive. So they are now above the 20-year average. But most other countries, as you can see, they're all kind of like above, with the exception of, Germany, UK, and Italy. Most other countries are with some, really, really painful numbers for example, China, Switzerland, Canada, and here, on the other side, Korea, Norway, and Sweden. They're all like been deteriorating over the past 3 years. So that doesn't, in a way, is, if you zoom out and look at what's coming, this is one of the main things, because it's spending, we call it debt service ratio, but the difference between, let's say, 100 and these numbers here is what's in your pocket. Okay, so as these numbers are getting worse, everything in the economy gets worse as well. So the fundamental of the economy are getting worse because there is less money going around. So the other part, why some economies are still done well, is because the public money has flooded the system. So there is a lot of fiscal injection from the government that makes up for the deteriorating real economy. And this is just to show you, leave this, I mean, we're not going to talk about this today, but just to show you what type of loans are used, the fixed rate loans are used across the world. And you can see a big difference between, UK, Canada, Norway, Australia, New Zealand, and the US. For the US, the most typical home loan, fixed rate home loan, is a 30-year loan. Okay, and where in most other countries goes up to 5 years. That means that the effect of tightening, or so raising interest rate, will be felt a lot sooner in these countries than it will be felt in the US. So this is the reason why it's taking a long time for for, in a way, bad news to filter through to the US, because a lot of people have felt no difference. If they fix their rate in 2015, they don't need to worry about that about until 2045. Obviously, there's a proportion of every year, there's a proportion of loans that need to be renegotiated, and this is why we see the slow increase in these rates, in the debt service ratios, because every quarter there are new loans that need to be renegotiated, whether by individuals or by companies. And every time there is a renegotiation, it's at today's rates. So it's not at the 0.5, 1%, 1.5%, whatever that was the last time they did, is now at 4.5, 5, 6, 7%. Okay, so this is the outlook that why we haven't seen still these effects on the stock market. So if we see the S&P 500 is still at the all-time high, very similar levels for the Nasdaq, just a little bit below. Yeah, it reached a high in July, and it hasn't quite gone above that. But bear in mind that these indices are dominated by a handful of stocks, the big technology stocks. More significant maybe is that if we don't even look at the Dow Jones, the Dow Jones is like an anachronistic index. There are only 30 stocks in there, so it's not really significant. But if you look at the Russell, Russell 2000, we still haven't made a new all-time high. So we're still at October 2021 with the high. So we're still well below the level of 2021. Okay, we're still about 10% below the high, and this is more like the real American economy than the Nasdaq and the S&P 500 that represent really are dominated by a handful of technology stocks. They are so much bigger than anything else that dominate the results that you see in the markets. So having looked at this for the economy, what is there to look forward to next week? So this week is today. So not a heavy week in terms of announcements. You guys from New Zealand will have seen the rate go down from 525 to 475. Like in many other countries, we seem to have now topped up at in these interest rate cycles, and now everybody started cutting their interest rates, some sooner, some later. Some have done already 2 cuts, some are just under 1, but everywhere in the world, this trend can be seen. The other one is the other big announcement of the week was the US inflation, the CPI, and although it was a little bit higher than expected at 2.4%, it's still below what it was last month. So the trend continues, maybe not as quickly as was expected. So by being higher than expected is another reason that tells the central bank, we may need to still keep interest rate higher for a little bit longer. Okay, so this is why we look at these numbers. So we look at the, as I said, inflation and job figures are the 2 main drivers of the decisions from the Fed. Okay, so today we have GDP figures for the UK. Nothing new. We kind of like on life support, and employment before market opens. We have employment numbers for Canada, and then the producer price inflation. So another measure of inflation. This time for producer, the goods that come into the companies that make goods for the public. Next week. Again, we got more inflation figures from Canada, from the UK, unemployment in Australia, and starting again the interest rate cycle. So we had New Zealand this week. The euro is going to be next week, and nothing else, nothing much. Some retail sales figures, but again, it's not a particular. The main announcement of the week again is the European Central Bank. It may change the interest rate again for the euro, but probably not. So there was a cut of 0.6% last time, so they might miss one this month and see how the economy reacts to that quite significant cut they did last month. Okay, moving on. So if you have any questions about this, please, you can feel free to ask them now. Otherwise, I am going to move to a few. It's not been a particular busy week in crypto either. As you can see, we're still in this sideways range that we've been in since March. What I was showing you last week is still in play. So we had a new higher high from this, and we still. So at the moment, what we're looking at, if you were looking at this or kind of actively trading, this is where at 52,500, this is where if we went below that, the structure of this will change. So we're not looking anymore at a higher high, but this higher low would have been invalidated. So we're not looking at the upward trend anymore, and we'll be morphing back into just sideways. I mean, we'll have to see if we can find this a impetus to to carry on what is called the October normally. October traditionally, crypto prices, tend to grow quite significantly. So let's see where we started the month so we can get an idea. Okay. So this is the 1st of October. Okay. So that's the price beginning of October. We were at 63,000 and change. At the moment, we're at just about 61,000. So that move hasn't happened yet, but there's still quite a while to go in October. So we may well end up somewhere above. My expectations is that we're going to be above this point, 66,000. Really, to have this uptrend confirmed, we need to break this. Basically, we need to go back to 70,000 and above. But I don't know. I don't have a crystal ball. I can't tell you what exactly how it's going to play out. But these are the levels that I'm looking at. So this one here will invalidate this uptrend, and this above this point it will be it will give us good reason for a continuation. But really, what I want to see this being broken. Oh, come on. Okay, so I want to see this point being broken to have a confirmation this is actually an uptrend rather than just more sideways movement. Okay, in terms of news, there's a really important thing. I don't know if I know that Jonathan is busy today. Probably, I'm not sure if he's on the call. Probably not. But there's a very, very important news in Cardano. Cardano is going through a constitutional time where a lot of meetings all across the world, people are meeting to discuss the first draft of the constitution, and then the representative from over 50 regional meetings will meet in Argentina to actually draft the constitution, at least the first draft, and then it will be voted on by all Cardano holders. So this is literally, we are seeing a democracy at work. Okay, so how do we build the rules for a new world, a world that spans boundaries, a world that could soon be present in a different on a different planet. So And this is how Cardano is the first project that has even attempted something like this. Okay, now the keys have been burned, so that the founder don't have control over what happens in Cardano anymore, but everything is going to be decided by the community. So it's the first truly decentralized project. And as part of that, this news comes from Argentina. I think I'll go actually the Twitter. So the first legally and judicially enforceable contract on the Cardano network was signed in Argentina, in full compliance with the laws of the Argentine Republic. Now, this has been, so there is a contract, there is a on-chain contract that has been made possible, it became legal because of a change in law in Argentina that made that possible. But this is the first example of a legal contract being enforceable in the courts. Okay, so what does this mean? So this is, this can be enforced in court for the performance of the obligation in ADA, which is the Cardano currency. Now, this is basically, it's just a test between two, crypto people, but it is a loan of ADA for 10,000 ADA payable in 4 months at an interest rate of 10%. Okay, and there is a transaction ID, and there are all the elements that need to be, for those of you that are legally minded, there's all the elements that need to be on a legal contract are there, and this is the person that actually produced the contract, which is an attorney anyway, part of the Buenos Aires Bar Association, and also a Cardano ambassador. Okay, so it's a student of both law and economics. So basically, he knows, he knows all the elements that a contract needs to have, and all those are included here. Now, the next thing is when these become more common ground, there will need to be, an education of the judges, because a lot of the judges obviously will never have seen anything like this. Some of them may not even have any idea what cryptocurrency is. But the main thing is that after this, the civil and commercial code was changed with the presidential decree in 2023, is now possible to have this sort of contract. Now, Cardano is the first blockchain that has made it become reality. Obviously, it's possible as well in other blockchains. It's not just Cardano, but it shows you. The reason why I show you this thing is simply I show you all the work that goes on in the background. It doesn't mean that because the price is not doing anything, is not moving, that there is nothing going on. There's plenty of stuff going on, and all this work that is done in the background is what will fuel the next wave, because people now can use crypto in their daily life. So this will be an example that can then form the base of fully smart contracts on chain. And a lot of these smart contracts may replace, as long as the country in which they are issued, does allow it, may replace traditional form of contracts. So this is the first example how for maybe a smart contract could replace a work of a lawyer, for example, because the smart contract will know exactly what items will need to be provided for the contract to be legally enforceable. So for things that are standard, where not a lot of customization is needed, this smart contract will be able to replace a lot of the legal work that is simply standard, when no input from really the lawyers is required, by just a matter of filling boxes. And I know, my father and my brother are solicitors, so I know that the work of a solicitor, is often template based. So it's not something that a solicitor needs to do a lot about. It just needs to be, check that everything is in place, and then send it off, for the necessary authorization. So This is really, really interesting. Other things that I have selected for you. This is another article that talks about South Korea. So now Bitcoin is officially again being recognized as divisible property. So doing divorces in South Korea now, Bitcoin can be recognized as one of the assets that needs to be divided during the divorce proceedings. So again, there are little steps, just embedding cryptocurrency into everyday lives. And now, as you can see, in different countries across the world, little bits of announcements like this will make cryptocurrencies something that is recognized, first of all, by the authorities, and secondly, something that is on a par with traditional asset classes. So all these regulation, in a way, it needs to be welcomed, because as cryptocurrency takes the place of traditional instruments, then so that institutions and also the regulation of the local administration, it needs to be embedded into local law so that everybody can use it. And in some countries, cryptocurrency can be accepted to pay taxes and so on. So little steps make a big difference at the end. Also, this is another interesting. So this is another Twitter article by this guy here, is one of one of the Bloomberg analysts that looks after ETFs normally. So this is a poll of ETF investors, and they were asked what are they planning over the next the next 12 months through what they were planning to use ETFs to invest in, and these are the kind of the asset classes that they were thinking of using them. So apart from US equity, obviously, the first one, but look at the second one, is cryptocurrencies. So there's a lot of interest in cryptocurrency ETFs, and then the other ones that bonds, real assets, international equity. There's a growing number of ETFs, even of like single stock ETFs, that allows American investors to invest in international equity, for example. So there is an ETF, for example, that invests only in HSBC shares, for example. So so you can buy these directly on the American stock market without needing to go into like international exchanges to buy, if you want to have this in your portfolio. And that was pretty much it. This is just showing you liquidations that as they come when Bitcoin price dipped briefly under 60,000. There were over 100 million of liquidations. So this shows you how sometimes these rinses are needed regularly, because there are lots of people that over leverage themselves, and with every when there is vulnerability, there is an opportunity for somebody that's got enough funds to push the price beyond the pain, the sustainable pain of somebody that has leveraged their investment. Okay, so these things happen on a weekly basis, but this was quite noticeable. And so you can see here, when price accelerates, when there is a break of a significant level, like in this case here, there would have been stops. Around below 60,000. So in our price, as price breaks, there is an acceleration until we hit a level of demand. Here was about 59,000, and then price goes back up. It's interesting to see you know, where this pain hits. And I'll say, you know, unless you are an experienced trader and you want to spend your day in front of the charts, I will say, you know, Bitcoin is a type of asset that is more, it lends itself more to a quiet accumulation than it does to, you know, than it does to day trading, and especially with this, you know, lower visibility that there is compared to, you know, regulated markets. It's you know, becomes quite, I would say, an asset that is, that can give you good return, but at the same time can take them away from you very quickly. Okay, so be very careful if this is what you are trying to do. So this is mainly the things that I wanted to share with you. So I will stop sharing now, and let's see if there are any questions coming from any of you guys. Anybody?
Quick question on that, Cardano, and following the
Sure.
Argentinian contract framework. Does this mean that every country that wants to do the similar activity will have to develop their own framework? Because countries will just say, we don't recognize Argentinians' framework. So what does it mean for the rest of the world?
Well, yes, obviously, it's every country must, first of all, if they want to, you know, if they want to have on-chain for certain things, they need to first approve it in law. It's, you know, it goes so. So there are countries already, for example, they register their contracts on the blockchain, like Dubai, for example, and where you can buy and sell a property on the blockchain directly. Now, if you are to do that in the UK, obviously not, that will need to be, there will need to be a law passed to make that possible. So yeah, it is the future, and it's something that I think is going to slowly happen across the world, because it's difficult to argue against. Whether there are some countries that will move faster, some countries that will move slower, but these are civil matters, so it's less one person against another. So it doesn't really matter if the contract is in Argentina. But you know, if you were to, you're talking maybe about if we involve two different, you know, legislative systems. You know, which one would take precedence? You know, but in this case, we're talking about civil matters within Argentina. So, you know, as long as the law permits it, then that the only thing they're saying is not that's anything different from the way a contract is stipulated. It's still got the same elements. So if you know, like I had to study when I, you know, doing my degree, and when you know, when there is a contract, at least in Italy, that's based on written law, and I imagine, you know, the Latin countries will have a similar system. There are certain elements that need to be present in any contract to be called a contract. Okay, and so all those elements are on this blockchain contract. The fact that is stored, the proof of this is electronic rather than, you know, physical, like a signature on a contract. That's the main difference. And for that to happen, there must be, you know, like in this case, there was a decree by the president, or, you know, a law must be passed. But it's interesting. It's very interesting. And South America, because some of the institutions have failed in countries like, you know, we've seen first El Salvador, then Venezuela, you know, and other small countries. There are more and more people that are actually bypassing their systems and going on to blockchain, because it offers them certainty. You know, whether it is for, you know, money, and because, you know, you've got countries in South America where the, you know, inflation is it's going at an incredible pace. So 1 week to the other, if you have money in your pocket, you may lose 15-20% of its value. So who wants to hold that long term? So everybody looks for alternatives, and definitely cryptocurrencies are one of the solutions that has been used. It's easier to use now. I mean, in Africa as well, there have been some innovative solutions. Like in Kenya, there were, now it's actually become a cryptocurrency as well, but they were exchanging mobile minutes as payment for goods. So that's an incredible thing. In Zimbabwe, they pretty much they were writing IOUs on bits of paper and then trading this IOUs because nobody wants to use the local currency. So yeah, it's an interesting world that we're living in right now. But if you notice, I haven't showed you today in terms of news that I brought to you, but there's a growing animosity of the IMF against El Salvador. And the main reason why there is this animosity is that because El Salvador is now using Bitcoin as a legal tender, and they have, and they actually have Bitcoin in the national reserves, and they've admitted it, talking about it openly, because that system has been used to pretty much do the biggest rug pull ever performed in the world, which is, take everybody's gold and enslave everybody to the US dollar, basically. So there is a centralized system of control. And once that was performed in 1971, what then the IMF has been doing is been enslaving all the smaller countries through debt, through loans and debt. And the fact that now that there is a possibility because they didn't want, the reason why all this happened is that they didn't want any country to carry on with the gold standard, because then you would have seen there are countries that have the gold standard would have been richer than the countries with the fiat standard, where the inflation would have deleted a lot part of the national reserves. So the fact that El Salvador even exists is a big thorn in the in their calculations, and if other countries were to follow through, will cause them a lot of trouble, and may lead eventually to a rethinking of the system, through Bretton Woods and the agreements that followed, when we left the gold system, and this will be coming during my lifetime. So I don't know. It could be in 5 years. It could be in 20. But there is definitely there is no way back from that. From my point of view, it's the discussion will be what replaces this system, not if this system will be replaced or not. Okay. I can have one last question if there is. Otherwise, we'll close the call here and then adjourn in 10 minutes in the AW room. Anybody?
Have you got any update yourself that I haven't maybe seen on the SEC's going after Ripple XRP again? Is there anything new coming out of that?
No, yeah, it was last week. They appealed the decision. That was pretty much clear in XRP. So again, it just another delay. So that's the what we got. I'm not going to go into the legal work. I'm not really interested in that. We only know that it's just going to take a bit longer, and XRP are going to carry on doing their thing in the background, and there are now demands for XRP ETF that might come into existence, but I don't think it can until the case is cleared. But it might be in place next year, and the same as other, maybe Solana ETF could come into existence as well, and I expect this to start trickling through. Now the Bitcoin and Ethereum ETFs are there. I expect them slowly to then percolate through to all the other major tokens eventually. But no particular news. I've got no particular insight on XRP. To be honest with you, I'm not interested in XRP anyway, with or without the court case. So I couldn't care less. Let's put it that way. Okay. But
sorry,
Hi,
it's
Mubin.
Bogi. Hi. Just quickly, I haven't been double checked about the carbon copy one. Is it still going, or what's going on?
Yeah. Nothing
Okay.
has changed. Nothing has
Okay.
changed. Like basically, we said when it was launched, that was like an 18 months window. So
Okay.
nothing has happened yet, and we're still waiting for for seeing the first breakthrough in the crypto prices. And
All right. Thank you.
yeah. We'll do updates at the end of the month on that as well.
Okay. Perfect.
All
Thank
right.
you so much. Yeah.
No problem. Okay, guys. So I'll wish you all a fantastic weekend if you're not coming on the next call, or otherwise I'll see you in 10 minutes on the AW call. Okay, so have a great weekend, everyone else, and